Hey, thanks everyone. So I did come in from London, but as you can probably judge from my accent, I'm also Canadian. And I grew up in India. So I'm a bit jet lagged, but I think I can do the best of what I can bring to you from a diverse set of perspectives. One of them is, of course, Canadian. Another one is British. And I want to also highlight India because I think as I traveled, to give you an idea, I was in Tokyo 2 weeks ago, London, Munich, and Vancouver within 24 hours yesterday. And that just brings a whole set of perspectives that are sometimes not that obvious when you're sitting in one spot. So we talk about fintech, and I want to focus, of course, on crowdfunding within the fintech industry, because ultimately crowdfunding is about investing. It's about raising money. And it shouldn't be lost on the macro level changes and the government kind of ramifications of what legislation brings about. I'm going to go back a few years. I was born in India. I moved to Canada when I was 16 and have been in London now for over 15 years. Now what's really interesting is that what we call crowdfunding today has probably taken about 400 years in the making. So let's go back to 1600, right? Let's go back, if you can sort of stretch your imagination, when this building was up, and India at the time had about a quarter of the world's GDP. And China had about a third of the world's GDP. Now in 1600, Britain had about 2.4% of the world's GDP, and Europe as a whole was about a quarter. We all know what happened since, and there's many reasons for it. But I would suggest that two things were fundamental to that change, and that's probably one of my themes here, which is the convergence of financial services and technology. So what do we mean by that? Well, in 1600, the British government, or Her Majesty the Queen, at that time Queen Victoria, gave company charters. And arguably in 1600, the East India Company got one of the first few limited liability company corporate structures. What that allowed that to happen is individuals invest in companies that allowed for new things to happen. Now, capital and risk are the two ingredients of wealth creation. The risk was taken by the early explorers, and the capital was provided not just by wealthy patrons in a government, but by public at large, i.e. the crowd. So in some ways, we're going full circle to where this thing started, because at the time you had capital structures, and you had the technology at the time, in the form of compasses and astrolabes and whatever else was out there aligned for that navigation. Now, one message from that is that, of course, 200 years later, Britain colonized India. India did not advance and adapt as quickly as Western Europe. So I think theme one is convergence of technology and finance can create really powerful effects. So let's not underestimate the power of that. An entire country got colonized because of that. And the second thing is, if you don't innovate, you die, or you get ruled over. And that is also something that you got to watch out for. Now, the third thing, of course, is that the financial services are getting disrupted, and I would argue getting democratized by this combination of finance, technology, and massive access to the crowd at large. Now, in North America, we've had a very famous case of crowdfunding going back about 150 years. To that of the Statue of Liberty, which in 1885, when New York received this gift after a 10-year delay out of France, they couldn't put it up because they didn't have enough money for a pedestal. So the Statue of Liberty was in a port in a ship and it couldn't be put up because you needed that base. Well, Joseph Pulitzer did a crowdfunding campaign, and at the time he used his newspaper called the New York World to raise money. They raised just north of $100,000, which was enough to put up the base and give a small gift to the sculptor. So crowdfunding's been around. In fact, it's been around for hundreds of years. The Greeks used it in some way, shape, or form to have poets sponsored. England used it in the 19th century to sponsor public parks. Bollywood financing in the 1970s with our crowdfunding. And now we're coming full circle with this here in North America and Europe today. So as we go across the world, there's a whole bunch of crowdfunding companies that we've seen. Do Rise in Dubai is one of the leading property sites. You look at the UK, Crowdcube, Cedars are there as rivals to Indigo and Kickstarter. The whole world is seeing this advent of crowdfunding, which in 2015 hit about $34 billion. Now, UK within that is about a third of the European size. Now, if you go back to 2010, that was less than $1 billion. That was about 880 million. So it's grown exponentially. And the rate of growth that it's going, by 2020, that'll be worth $90 billion, so it'll triple in size. So this is not something that's, as some people may have thought a few years ago, a fad or a novelty. This is here to stay. And those three things of convergence of technology, government moves or lack thereof, and the democratization of financial services are all creating this impetus towards greater democratization of the financial services world. Now in the UK, there's been about 1 million people who've invested in crowdfunding companies. That's 1 out of 30 people in Canada. So you're 2 persons away from you, 1 person there is invested in crowdfunding, or equivalent in the UK. Nearly 250,000 companies or individuals have raised money from crowdfunding. We're probably at the lead of this, and there's some structural reasons for that I'll get into in a minute. The size of the UK market is about 1/4 of the entire North American crowdfunding market. And that also shows why we're kind of, I think in some ways, a time capsule of what could happen here in Canada down the line, provided some structural changes are made here as well. Now within that 34 billion, there's a breakdown. The biggest one, of course, is lending. And $25 billion of the 34 billion is purely lending activities. Equity is a smaller component. Now, during the corresponding period from 2010 to 2015, European banks lending to SMEs dropped to 1/3. So you've seen a corresponding increase of alternative finance platforms just as the banks are pulling in on their lending activities. Now, not only is it challenging bank lending, it's challenging our traditional equity models of financing. Now in Canada, when I came back after a few years, about 3 years ago, everyone said to me, the going public is not a liquidity event, it's a financing event, because there's a dearth of angel and VC money out here. Well, crowdfunding has overtaken, as of now, with a 34 billion figure, in excess of VC and angel money does. Traditionally, VCs have invested about $30 billion a year. Well, 34 billion is in excess of that. By 2020, if you're at 90 billion, you've tripled that. Even if you add the angel investment, which is about $20 billion a year, we're going past that very soon. So crowdfunding is not something that is augmenting, it's actually replacing some of the existing forms of financing. Now what happens next? You look at which businesses go and which areas get funded. Again, if you go back to the UK, we have 40 crowdfunding companies out there. There's another 70 that have applied for licenses. The number of countries that have equity crowdfunding platforms are about 17 and growing. Now, the UK has some structural advantages. One of them is based on tax. We have 2 schemes there. One is called the Enterprise Investment Scheme. The other one is the Seed Enterprise Investment Scheme. And what they do is they allow for investors to go into a deal knowing that their downside is protected because they can get a tax write-off or a tax credit, where up to 70% can be protected through tax shelter schemes. And on the upside, your capital gains tax can go down to 0 if you go in the right schemes. So one reason you've had over 1 million people participate in crowdfunding and 40 companies in that country, and now 1/4 of all European crowdfunding in one country alone, is because the government has recognized that this is a very viable form of finance, it's a credible source of financing, and let people decide themselves. Like, we have some very strange arcane laws across the world, Canada included, which only allows for sophisticated accredited investors. So you have to have a net worth of, say, $200,000 to be accredited. Well, if you're a professor of finance making $150,000, you're probably more qualified to invest than someone who makes $500 million trading commodities or who inherited that wealth from their parents. So our notions of what makes someone accredited or sophisticated are a bit skewed, and they're a bit arcane. That has to change. So the UK, they make it much more amenable. If you think you're accredited, as long as you don't invest more than 10% of your net worth in a deal, you're fine. You're responsible for your financial future, not legislation. Of course, with that has come a whole bunch of successes. I'd say the first unicorn in the crowdfunding fintech space is a company called Funding Circle, which in 2014 raised money, oversubscribed, it was over $1 billion in valuation. That's prior to Prosper and Lending going public in the US, and of course they were public companies, so you can't make the same comparison. But we have yet to see that happen, certainly in Canada. It's very, very nascent. And on the back of one success like Funding Circle, other companies like Crowdcube, Zopa, Cedars are all following with higher and higher valuations. Now it is an early industry, don't have any mistakes or any misnomers about it. There's not a lot of companies making a profit, but it is an industry which is growing rapidly, where more and more companies and individuals are getting drawn to. So what's the government doing about it? I'd argue that the UK is very proactive. The US, of course, with the next iteration of Title III for their Jumpstart Our Business initiative, is going to make this much more possible. You could have about a quarter billion people more in the US access crowdfunding platforms. There's a great promotion for diversity amongst ethnic groups to be part of this. And that could lead to a whole wall of new money. In the UK, we have something called ISAs, or individual savings accounts, which are equivalent of Canada's RRSPs. And as of this year, as of September, you can direct your ISA/RRSP money into equity and debt securities. So there's a wall of money coming right after this, in addition to the tax credits that are available already. Now, the US has, of course, seen growth. There's been an 82% annual growth, and Kickstarter and Indiegogo are prime examples of that. But where do we go from here? What's the future looking like? We set up a company called Fineqia, which is a UK-based company. It's listed in Canada. We're actually halted on our trading because we announced a change from a, funny enough, mining business to a crowdfunding business back in March. And the stock exchange said, it's great, but we need to put you on a halt for your stock because speculative investors get in. And as I can't obviously talk too much about it because we're listed, we do see a lot of announcements that fit this theme of how private crowdfunding is disrupting the capital market space. And we're bringing a lot of debt deals to the platform. And I guess the thesis is, if you look at Silicon Valley as being the hub of technology, access to that is very limited. You have to be in the valley. You could argue that London's the hub of fintech, and access to that's very limited. Well, we're providing through our stock in the US and Canada and Germany the ability to access innovation. And that's why Fineqia was born. It's actually kind of a unique situation where our operating companies in the UK, but our stock listing is here in Canada. So why? Where do you think capital markets are going? Well, my cousin is one of the top guys in the Toronto Stock Exchange, and they keep talking about how they either cohabit themselves with the stock, the changing world of crowdfunding, or they wait and see what happens, or they just try and quash it because it is a disruptive industry. So one thing that's happening is, of course, is direct public offerings, and you can see companies. If you've ever been to London, there's a famous John Lewis department store. Well, about 2 years ago, they had one of the biggest debt offerings on a crowdfunding platform. They raised £57 million through a bond offering on a crowdfunding platform directly. And very interestingly, while they offered a coupon for that debt, about 4.5%, they also offered in-store vouchers worth 2% more, which of course for them is worth 10 pence on the pound, but the perceived value is £2.50 interest rate. So crowdfunding allows for innovation. It allows for different ways to approach debt and equity funding. What's happening in Canada is really interesting, is that while crowdfunding is growing, and as I said before, the stock exchange listings are quite often access to capital rather than access to liquidity. When you look at the first half of this year, I almost dropped off the chair when I read this. You've only had about $2 million raised in the first half of this year. One in the second quarter, this year, compared with about $1.5 billion in the previous corresponding 6 months of 2015. So of course, there's multiple reasons for that. The mining industry is one of them. The fact that the stock exchange is suffering from that downturn in the commodities market and metals market is part of it. But I'd also say the fact that you can access finance through different platforms, peer-to-peer platforms, crowdfunding platforms is a huge part of it. That phenomenon is being seen across the world, certainly in the UK as well. And I think this is just the beginning of something to come. Now, the other part that strikes me with Canada as to why it's not growing this much, and I'd argue somewhat contentiously, is that too much of the entrenched interests are protected by the banking industry. So if you look at financing, you either go to a bank or you go to the stock market. You get a loan or you get equity funding through the stock market. Well, in Canada, the lending market is controlled by the banks. I'd say the top half a dozen of them. You then go to the stock exchange. Who owns the stock exchange? The banks again. You then look at the network of broker-dealers that allow for the vetting of new instruments to come on board, such as crowdfunding. Well, the EMDs, or emerging market, exempt market dealers, are also largely owned by the banks. And that stifles innovation. That stifles the ability of new entrants in the market because it's not in their interest to promote something. You look at the UK and Europe where lending dropped a third. Well, why would you want to do that if you're a bank? Well, the consequence is, well, you can ignore it, but the market reality is going to come for yourself anyways. Because in this world, we're very, very, very interconnected. What happens here impacts another place. And what happens in UK and the US is going to impact us in Canada. So I guess my conclusion on this is, if you look at some examples in the world, you look at, going back to India and the 3 citizenships I have, what would you say is the most successful industry in India in the last 20 years? Anyone that hazard a guess?
Bollywood.
Bollywood's good, but that's probably been around from like the early part. 70s, yes, and crowdfunding, yes.
Software development.
Sorry? Software, absolutely, IT. And I'd say the reason why IT's been so successful is because if you go back to the 70s when Bollywood was being financed by crowdfunding, government officials did not know anything about hardware, which is what IT was at the time. They taxed computers like they taxed sewing machines, because it was the equivalent for them in terms of machinery. They just didn't know what IT was about. That was a blessing in disguise because it allowed the IT industry to flourish. The ignorance is bliss worked in our favor back then. Well, in Canada, unfortunately, it's neither a proactive stance like the UK, which allows for tax incentives, which is allowing for the ISA/RRSP money to flow into it, and it's not absent either, let's say, let the industry take care of itself. It's kind of this interfering model, but inhibiting the industry, not allowing it to grow. I think that has to fundamentally change for the Canadian crowdfunding industry to really, really grow. I'd say secondly, we're living in a world which is far more financially democratic. So many startups have seen, including in Tokyo a few weeks ago, where it's not your credit score that matters that much anymore. It's your social media score. How well connected you are and who are you connected with and which events do you go to that you put on Facebook and Twitter and LinkedIn and Pinterest and so on and so forth. And your ability to borrow is no longer just how a bank accesses the information, it's how a counterparty on the other side of a platform views your risk profile. And that goes going back to, sometimes they say the more things that change, the more they remain the same. Well, in some ways, this is what happened in India when I was growing up, because if I wanted to borrow money, I'd go to somebody who my family knew, and my mitigation against non-payment was not my credit score, it was social shame. If I didn't pay, I'd probably get a call from my uncle, and trust me, I feared that call from my uncle more than I feared a call from the police. And that would force me to pay. So I would argue social media inclusion, social media honor and shame, in addition to our established structures, is where we have to go with crowdfunding. And that's where I think a lot of the new entrants are going. So in conclusion, I would say, look, we have no doubt that this is an industry that's here to stay. If you take an approach that's kind of an ostrich-like approach, you risk getting colonized. And there's historic examples of that. If you take a proactive approach like the UK government, you can be a winner. If you take, at the worst case, a non-participatory role and let the industry take care of itself, that's also good. But the worst thing we can do is let entrenched interests in the financial services block change. So if you try and block change, the only thing that'll happen is what's happening on the stock exchange right now, where $1 million or $2 million is raised as opposed to $1.5 billion. You will get usurped and disrupted. Thank you very much.